Julian Pendock is with us as guest host in the studio this morning. Julian is with us from Senhouse Capital. He manages money. Good morning, Julian. Good to see you. Jim Rogers is joining us on a camera now out of Zurich. Jim is the CEO of Rogers Holdings, of course. Jim, hey, good morning to you. Jim, we're sort of through this 12,000 level on the Dow here, and we just seem to be hanging on to it with our fingertips here. What's your call on where we go with equities near term?
Well, Jeff, I don't own very many equities. I haven't bought many equities in a while because I don't know what's going to happen to the world economy, but I expect more currency turmoil, more social unrest, more governments collapsing, so I'm investing in currencies and commodities rather than stocks.
Commodities and currencies, so pick some for us, Jim. Let's get you to just explain what your investment thesis is right now.
Jeff, I've been explaining to you and everybody on CNBC for a year and a half or two now that food prices are going to go through the roof. They're going to explode. It's happening. I still would buy agricultural products. We have serious shortages of everything developing, including shortages of farmers. This is a serious thing which is going to last for a long time. It's going to cause more upheaval in the world, and it's going to cause the investment opportunities.
I caught up with the head of Syngenta when I was in Davos, Jim, and Syngenta's a company that makes crop protection, chemicals, pesticides, fertilizers, and his line on this was that farmers are responding, that in 12, 18 months' time we're not likely to see any crisis in the supplies of soft commodities into the market. Isn't that an indication that perhaps we should be a little wary about chasing the agricultural food price rises that we've seen?
Well, I hope he's right, but he's not right because inventories of foodstuffs around the world, the lowest in many years, or near the lowest in many years. Jeff, the average age of farmers in one major agriculture state in the U.S. is 58 years old. In 10 years, those guys are going to be 68 years old. We have shortage. In parts of Japan, they have no farmers. I mean, this is not just farmers responding. Of course, farmers are going to respond. But we're going to have more problems in the weather. We always have anyway. We have huge shortages of inventories. We have shortages of farmers. I would like to think that's the case, but it's just historically cannot be. Jeff, it takes 7 years for a coffee tree to mature. Orange trees, palm trees, you don't just snap your fingers and suddenly have some more palm oil. All this takes time.
Jim, isn't there a risk, though, that what we're seeing in these commodity prices, given that they all seem to be correlated, is a response not to demand, but to the QE, to the printing of money, to financial speculation? This is not demand-led inflation in commodity prices, is it?
Well, Jeff, I'm sorry to disagree with you, but first of all, QE2 is part of it. Whenever governments have printed money throughout history, people put their money into real assets, whether it's rice or silver or natural gas. People protect themselves. People don't just sit there and say, oh, give me some more paper money that's being debased. That's part of the problem right now. But the more serious problem is, you say it's not demand. Go to India, go to China, see how people are changing their lives and how they're using more. But it's also supply, Jeff. Commodities are based on supply and demand. You could have demand go down, but the supply goes down more, you're going to have a bull market. This is simple stuff, and it's happening right now. And by the way, I heard your comment about evil speculators.
Jim, Julian here. Last time I spoke to you, always very, very bullish commodities and very bullish China. Now, surely there's a bit of an inherent tension there, given that the one kind of inflation that China can ill afford, like any of these countries, is food inflation. So, obviously, the Chinese market's been a real dog for quite some time. Surely, have you rode back on your extreme bullishness on China, given the developments in the commodity world and your thesis on commodities?
No, why should I? I mean, China will have setbacks along the way. America had plenty of horrible setbacks along the way. I haven't bought any Chinese shares since November of 2008, but the China story is not changing. I mean, China's going to be the next great country in the world. There'll be plenty of downs, there'll be plenty of setbacks, but, I mean, if you think that the China story is wrong, I urge you to sell short China.
Jim, hi, it's Steve here. Just, I don't think speculators are evil, but you know as well as I do they exacerbate price movements. Sometimes, believe it or not, they even cause price movements as well, including in the oil complex as well. I presume you're long oil if you're touting $150 a barrel.
I'm long all commodities. I've been long all commodities for 12 years now. I'm long every single commodity that trades in the public.
Good. So oil's going $150 a barrel. You're long the underlying. Why is oil going $150 a barrel? There's plenty of oil around.
Well, I'm glad to hear that. You should tell us all where it is so we can invest in it too. The International Energy Agency is going around the world to every country saying, please listen, we've got a crisis facing us. Known reserves of oil are declining. Please, Steve, please tell us where the oil is. I want to invest in it too. Tell Exxon, tell the IEA, where is it?
Well, for a start, it's in Iran. For a start, it's in Iraq. For a start, it's in Saudi. What else do you need to know? Do you want to know about gas shale? Do you want to know about alternatives? There's plenty of energy around, Jim.
Well, Steve, then I suggest we don't need to discuss this. You just short oil. I'm long energy.
And you're putting your money where your mouth is, and I'm very pleased to say. But what I want to know is, what's consumption of oil a day? 85, 86 million barrels a day? What's it going to be next year? 87, 88 million barrels a day?
At the moment, it's...
What the point I'm making is, there's about 3 billion barrels a day of this stuff trade on the market. You're telling me it's not the speculators driving this price up?
Wait a minute. First of all, I don't know what it's going to be next year. If you want to know what the consumption of oil is going to be next year, Steve, you should watch CNBC. They know this sort of thing. They talk about it every day. 86 million barrels of oil trade every day. Are consumed every day. I'm not sure what your point is. That's staggering amounts of oil. And by the way, 86 million barrels a day trades 365 days a year. We're not just talking about 200 days when the exchanges are open. Oil is being used and consumed and bought and sold every day of the year.
This is my point. It's 86 million barrels a day that is actually consumed. You, me, Jeff, Anna, everyone. We use 86 million barrels a day, and including the Chinese. The point is 3 billion barrels a day are traded. 3 billion barrels a day traded, 86 million barrels a day consumed. I think the speculators might have a small hand in the price exacerbation.
Steve, for every buyer in the commodities market, there's a seller. What are you talking about? Somebody's... Who are you condemning? The sellers? The people who are selling 3 billion barrels a day? Or the people who are buying it?
Oh, so the market's...
Remember, in the commodities markets, you're buying and selling.
I apologise. I stand corrected. Speculators do not move prices. There you go, Jim. Anna, come in.
That's a rare thing, Jim. You got an apology out of Steve there. You have to frame that one. I know that you've said that you're not interested in stocks, but as long as I've known you, Jim, you've said you're not interested in stocks, and it seems to it's not what you do. But I mean, many people are talking about yes, we're going to see inflation, but there are some stocks out there that might be good inflation hedges, ones that have maybe a little bit of pricing power if the Chinese economy and the other Asian economies continue to grow. I mean, is that something that you'll ever consider getting involved in, or do you just have a blanket ban on stocks?
Anna, I own some stocks. I periodically buy and sell. I've sold some stocks short right now. Yes, I invest in stocks and always have. But Anna, commodities have outperformed stocks by 10 times. That's 1,000% over the last 10 or 12 years. Why aren't you doing only commodities, for goodness sakes? It's outperformed stocks by 1,000%.
We'll change the name of the show.
To me, it's pretty simple.
We'll have to change the name of the show.
You should change it to Commodities.
Squawk Box. Yes, that would be good.
Commodities NBC.
Which stocks would you short at the moment then, Jim?
Well, I'm short emerging market ETFs. I'm short some of the NASDAQ ETFs in the United States. That's essentially where I'm short. Not I have big shorts, but I have started shorting again. For a long time, I had no shorts. For one of the few times in my life, from the fall of 2008 till I think the spring or summer of 2010, I had no shorts. But now I've started shorting emerging markets and NASDAQ kind of companies.
Jim, look, it's a real pleasure to speak to you. Always nice to have a good old chat. Jim Rogers, CEO of Rogers Holdings. Thank you very much indeed for that. Right.